Good morning, everyone, and welcome to the Quantum Leap homework session for Monday, February the 3rd, 2013, or 14, I should say. Brand new month, brand new week, so it should be interesting. For those that are visiting us from Twitter or are watching this after the fact on YouTube, we are Quantum Leap. We are a self-organized learning environment. We've been in existence for over 4 years now. We are a private venture. We are not a commercial venture. If you're interested in coming in and checking out our chat room, you will need a Skype account, and then you can send me a contact request at Doug_McKay. That's MCKAY, and I'll be the one from Windsor, Ontario, Canada. In addition to having the Skype room, we do a daily homework sheet and put it out into the room called the Quantum Leap Trade Tracker. But obviously we've got a little bit of a problem and not always, out on time, but 99.9% of the time we are pretty good at getting the sheet out before the market opens. So what we do each morning here is we come in and go through the macro to the micro numbers, take a look at the macro to the micro trend in the different time frames. Obviously I don't have the homework sheet up right now, but we do have some key numbers that we want to watch for. Two numbers you want to look for below is obviously we now have the prior month low in January down at 1761.25. We have the December low, which was the number we were watching, prior to the completion of January at 1754. Of course, the open of the year is 1837.75. Obviously, we are way below the open of the year, and the year high so far up at 1845.75, and the all-time high up at 1846.50. Those are kind of the key areas that you want to watch for. We'll take a look at it deeper on the composite chart and on the intraday when we get to our level set up. But let's take a look at the macro to the micro in terms of the trend itself. Obviously, the monthly trend is still very much intact. We have not had a close below the 20 SMA in the last 2 years. We haven't had a close below the 9 EMA, pretty much going all the way back to the May of 2012. So very strong trend. We were in we're in a position of possibly breaching the low of December low at 1754. We only got as low as 1761.25. So we are holding within inside of the prior month. We actually have what I call a Mr. Sneaky, an inside bar, lower high and a higher low. So this sometimes can lead to a reversal signal. We'll keep an eye on it. Hasn't been that reliable on the monthly with this strong trend. But we are currently trading, basically coming into the week back in balance again, in around that 1781.50 composite high volume node and the former microcomposite VPOC. We've got good slope and separation on the 9 EMA and the 20 SMA, so overall, even coming down, if we come down, we got a little bit of a tech gap going here against the 9 EMA, even closing that tech gap up. Closing that tech gap will not bring us into a change in trend on the monthly. In fact, coming down to test the 9 EMA is likely going to be in around that 1730, 1732 and a quarter area, which is going to be a very key area for us for this month, and a test of the overall long-term trend. Going over to the weekly, you can see that we talked about this tech gap last week, coming down and closing it. Of course, we had that big down move and came down and tested the 20 SMA, and we're currently just sitting right on top of the 20 SMA right now. But we've lost slope and we've lost separation, so we are seeing some weakness coming in on the weekly trend. Going to the daily, well, we talked about the fact that we had made the crossover last week. We came down, created this tech gap right here, came up, closed the tech gap, rejected the 9 EMA from below, and then we were moving further down. We're getting slope and separation to the downside. So we are seeing some weakness on the daily coming in. We really need to get back above the 9 EMA and get back into the 1800s to see if they can make another push back up, into the 1800s and possibly go. I still think this is relatively a weak high that we've got going here between the 1845.75 and the 1846.50. If we can get back into the 1800s, I think we make another push up to test those. But again, we're trading down in around that balance around 1781.50. So we have to look at what levels are relevant for us to trade this week. Just want to go quickly take a look at the geometric chart. We are sitting and riding the center line of the downward sloping fork right now. We're currently below the center line. If we continue to stay outside of the longer term fork, this is the fork that we've been following for months and months and months, this bigger upward sloping fork, and then I had added the intermediate time frame fork. We've now come down. We rejected off of the center line once again on the longer term fork and came all the way back down and tested the center line. We hit that energy point that we were watching for a couple weeks prior, came right down and hit it, came down and hit it on the exact day, which was the 29th. We came down earlier, but on the 29th we did come and hit this energy point here. And that's our key balance right now, is around that 1781.50. But we are seeing some weakness. We are struggling to get back above the center line and back above the lower line of the two opposing forks. So as long as we stay below this larger fork, we're seeing that weakness come in, and we could see some continuation to the downside. So this is a key level for us to get back up above these two areas right here. But let's take a look at this on a bigger time frame and look at what it looks like in terms of the composite. Of course, we started this last push up in around that balance around 1752.25. Broke out of that balance, came up and created accepted value in around that 1781.50. Then broke out of that. Just before they broke out, the most accepted value was 82.50, and then they went up, made the new highs, tried to hold value up around this 1832.25. They couldn't, came right back down into this former balance area, right down to the 1781, and so far we've just been chopping around in this area. So we're currently in this distribution zone between what I consider to be the 806.50 to 807.50. CLVN, this area of rejection here, and above this 1764. 1764 still remains to be the key line in the sand. We'll probably come down and test this again this week at some point in time, but if it doesn't hold, as I mentioned on Friday morning, start selling and get short into a rotation back down towards this 52.25, where they push through to test the other side of balance of that, which is that 46, and the value area low for that area of balance in the microcomposite that runs between October 25th and November the 13th. That value area low is down there at just above that 46 area, the CLVN at 47. And then the value area high to that area is up here at 1760.75, so just below that 64. So if we break 64, I get short into the CHVN at 61.25 with a continued rotation back towards this 52. And I've mentioned this many times that this area, this distribution zone between the 46 and the 64 is, really undefined in terms of fair value. You've got a lot of peaks and valleys here of what I consider to be undetermined fair value, and we're likely to come down here and chop quite a bit. As you can see, when we are in this area, you can see the amount of wicks and tails that we had as they, chopped around to determine, this 52.25 before they finally launched higher. So as we come back down here, I think you're going to see a lot of the same. We come down here and mature the auction to determine the most accepted value, which currently is this microcomposite VPOC, which remains naked. If we hold above 64, I'm anticipating that we're going to, get some continuation of chop in this distribution zone around 1781.50. The last 5-day microcomposite, the values creeped up a little bit higher up here at 1786.50. If we can get back up into this 1781, I'd look for a continuation and a push through to test that 86 1/4 and see if we get responsive sellers stepping back in there. But if we get above that, then I'm anticipating a move to push to test the value area high of the 5-day microcomposite up here at 1788.50 and test the other side of this balance here at 1789. And then above 89, everything shifts up again to the 1798 1/4, which is where they tried to hold value higher inside this upper distribution zone around that 1781.50. And then if we can accept that value in around 98 1/4, look for them to push through and test the range high, the microcomposite range high up here at that 1806.75, 1807.50 CLVN. And then if we can accept the 1800s, that's when I'm anticipating a larger rotation back up, towards this 1832.25 and a push to make new highs and take out this what I consider to be somewhat of a weak high. So let's take a look at what's happened overnight and move our numbers over to our trade chart and set up our levels. So currently right now we have a Globex low down at 1771.50, which is just above the Friday value area low at 1771. Overnight high is currently up at 1783.75, which is basically one tick higher than the value area high. So we have a range overnight inside of value of Friday. So we're going to, if we open up, we still have a half hour, but if we open up, in this area, we're opening up inside of value, inside of range, and right around this major, price acceptance at 1781. So inside of this, I'd be looking for a lot of chop and a high probability of coming out and taking out the naked VPOC from Friday at 79 1/4 and the naked close, which is 1777.75, and a continuation up towards back to balance at 81 1/2, where they push through to the high side of value up here at the 1783.50 and the overnight high at 83.75. So be careful on the open because there is going to be chop. But if we can, let me just bring this down. If we can hold this 1773, which is the, let me just bring this to the front so you can see this. The 1773.75 is the IB low and the key LVN from Friday. You basically got, a bit of a double distribution. It wasn't really defined down here, so I think it's it's a weak auction down here, and we're likely to come down and test this level. So I'll be looking at the 1773 area as an area that I want to do business down here, because if we come down here and test this area, I'm going to be looking for responsive buyers to step in and hold us inside of value and push back towards closing out the gap and taking out the naked VPOC with that push through to take out the overnight high and test the value area high up here at 1783.50. This will be my other area to do business. I won't really look unless I get something that is really defined. I won't really look to try to take a trade today inside this area, because I'm going to anticipate a lot of chop, and I just don't want to get chopped up. But if we do come down here and test the 73.75 on the open and we find responsive buyers, I'll try to get long here up into that 81. But if I see continued weakness coming in, then I'd be looking for a push down into this lower distribution and a push through to take out the overnight low and test the value area low. This will be my immediate target and a trade area that I'll be looking to do business again, and I'll be looking to see if they come down here and see the value area traders try to hold us in value. Below 71, then I'm anticipating a push down to test that 64. And now you can see I didn't take this off my chart from Friday, that this is a key trade area for me. Everything above 64, I'm looking for a higher probability of rotation up through to 81. So I'll really be looking to buy the dips down here and look for responsive buyers stepping in. But if we breach below the 64, this is where I'm going to be looking to start building a much bigger short position, start working on developing my swing short again, and then I'll be selling into, which is my first target below, which will be the 61.25. And just below that, the 56. So I'll try to get funded and into a trade before we get to the 61.25, which is a former microcomposite VPOC, and the CHVN here. Right here, with a continuation, which will be my main target below at 56.50. And then, of course, we've got to look for the continuation and the extended target down here at this naked VPOC, which is where I'm anticipating the move, the drift down towards that with the break of 64. So this will be my secondary target below at 52.25. With the other side of balance being that 46 CLVN and the just below the value area low that I was just talking about. So between this 46 CLVN and the 47 value area low. So I'll just put it right here at 46.50, and then below that, everything to me shifts down towards this 32.50, which is that naked microcomposite VPOC down here, and the balance area that started this whole move up, basically a return to the scene of the crime. And you got a lot of targets just below that. So once we get down here, I'm looking for continuation and a push through to these lower targets at 27.75, naked VPOC, the 22.25 naked close, and naked VPOC at 17.16, and then you've got that 17.13 area below us again. So that's why I'll start working a more aggressive short. Whether that happens today or not, I don't know. Right now, we're still holding pretty much inside of this distribution zone around the 81. So if we can hold this 73 to 71 area, then we're likely to get that rotation back up towards 81 and test this 83 level. Above 83. Then I think that we'll get a push through to this 86 and a quarter. So I'll be looking to get long into that, and then of course a push through to that 86 and a quarter, which will be the immediate target above. And then continuation to test the range high at 88.25, which is just below the CLVN at 89. So that'll be another area that I'll be looking for possible responsive buyers and responsive sellers to hold us inside a range and come back into value and back towards that 81, staying in this balance area. But if we break out of that 88, then I think we'll probably get a push through to those other targets above. First one being a naked VPOC from Thursday at 1790.50. And a push through, which will be my extended target above up here, and that key 98 and a quarter, CHVN, and where we are trying to hold value up here before in this 98.97 area. So right around that CHVN around 98, and of course that is a naked VPOC, so that will be an extended target for me there. And then above that, we push through, we get into the 1800s. Next area I'd be looking to do business would be up here at that 1802.50 again, and that was the most accepted price just prior to the breakout of the balance around that 81.50, and a major extended target, if you want to call it that, would be up in that 1813 area. So that's basically what I'm looking at and levels that I'll be trading today. Again, be careful in here. It's going to be choppy with the open auction in range and in value. Taking a look at the Keltner, center Keltner line right now is right around that 77 area, and if we get above that, a test to the upper Keltner will take us up to 82.75 or back into balance around that 81.50, and a push through likely to test the value area high. Stay below the Keltner center line. We don't really have any direction on the Keltner channel right now. It's been going sideways, but below the center line, a move down to test the lower Keltner channel line will take us down to test the value area low and the overnight low at that 1771.50. Taking a quick look at gold, I did a little bit of moving around my microcomposites in gold, but the story doesn't really change. Right now we've got strong balance and price acceptance in around this 42, 1240 to 1242 area. So, this is becoming much more mature and accepted price, and we're holding that right now. We're currently trading 1247.20. I'd look for a break above the, value area high of this 3-day microcomposite and this key CLVN at 1249.75, and a move above that. All the same numbers again, gang. You've got 51. You've got this 58.61 area. The key resistance above us is the 65, and if we get above 65, it's right back up to looking at that 72-74 area with a push up to test the range high and the key CHVN at 1782.30, with 1300 being a psychological barrier and centennial number and resistance, and above that we still have that 1315. But again, I think we're going to still stay within this distribution zone around this 1242 area. If we can't hold above that, we come back down and test this 42, they're likely to come down and push through that key area we kept on talking about for the last couple of weeks, that CLVN in at 37. Below 37, everything shifts towards that 25, 26 area and the other side of balance, down there at the 18 and a quarter, and below that, back at that big number to come down and see if we can hold the 1200s and find buyers down here at this microcomposite VPOC at 1203.30 area, which is, been a key area to hold into the 1200s. And then below that, test of the 1100s will probably take us back down into this 1171.75 area and a push through down to the big number below that we talked about when we tested the 1100s the last time, in around that 1160.80. So that's everything that I've got this morning. Again, Howard's not in today, so I'll see if I can contact him. If he's got the numbers done, we'll put the QLTP sheet out into the room for you traders. I am going to be trading today, so for those that are in the live room, once I close this room down, we'll open up the live room and get set up for the day. Once I'm done, I'll also post this chart on Twitter and into the various rooms. As always, trade well, trade safe, and we'll catch you on the flip side.